Finance Minister Godongwana's budget speech has met with mixed reaction from different stakeholders. Investment company Foord Asset Management says the pressure was on Godongwana to give South Africans some good news, especially in an election year. The company's investment executive, Linda Eedes, joins us for more. Linda, appreciate your time this afternoon. How would you characterize the overall tone and direction of Minister Godongwana's budget speech, considering the economic challenges facing South Africa?
Good afternoon, Hugo, and thanks for having me. Yes, I think it was a bit of a mixed bag. As you mentioned, it is tricky to deliver a balanced budget during an election year. There were some things that were fairly good, other things that we remain slightly concerned about, but overall, a fairly sensible, balanced budget.
I still think that there's a deficit of 50-odd billion, if I'm not mistaken. If this is the amount, do you think the minister did enough to try and bridge that gap, or could more have been done?
Well, the National Treasury did have a little bit of good luck in the form of the windfall through the unrealized gains in the gold and foreign exchange contingency reserve account, bit of a mouthful, otherwise known as JFECRA. And so they were actually able to use that. The market responded quite positively, but over time, we've seen that has reversed a little bit and the rand has gotten weaker again. And I think the realization is that that is a short-term solution. It's not really a long-term, sustainable plan. What we really need is a budget that's actually going to deliver economic reform ultimately. And we remain concerned about the high levels of government debt and the high proportion of interest paid on that government debt as well.
So what are the key factors contributing to the decline in tax revenue for the 2023-24 period? And what measures did the minister propose to address this shortfall?
Well, previously, one of the other windfalls that we have had as an economy is through obviously being a resource-oriented economy, so having commodity-producing companies in our economy. Of course, that wasn't the case with commodity prices having fallen. And of course, our economic growth remains very, very constrained. So at the moment, our economic growth is actually less than our population growth, which actually means that we're going backwards on a per-person basis. So, of course, that is going to constrain the taxes that the government is able to receive in the form of revenue.
Now, there's been a proposal for effective tax rate, rather, for multinational corporations. What impact do you anticipate it will have on corporate tax revenue and business operations in the country?
Well, this is not an uncommon thing. Of course, many countries have bought into that reform, and ultimately it should see the tax base actually widening. So ultimately that's actually going to be a net positive contributor to corporate tax revenue for the country.
Now, what's countering that, obviously, is that spend on public sector wages. How does the minister plan to offset this large wage bill increase with the departmental cuts?
Well, unfortunately, part of those gains on the JFECRA account will be used for that. That is something that we remain concerned about. Increases on the public sector wage bill have typically been in excess of inflation, and of course that's not sustainable ultimately. But of course, with it being an election year, very difficult to cut there. I think what we're waiting to see is whether the commitments in terms of what is actually budgeted turn out to be the case. And that's also going to be something we're going to be watching closely with regards to the SOE bailouts. So no SOE bailouts were announced beyond what has already been provided for, but whether that turns out to be reality is something that we will watch.
So let's talk about the NHI and your thoughts on that and what the minister's proposed.
So there wasn't a major provision for NHI, and we see that as a positive thing at this point in time. I think the recognition is that a lot more work needs to be done. The reality of the situation is that government doesn't have the best track record in terms of implementation. So with regards to any spend, we need to have a considered plan and know that it's going to be feasible and sustainable. We've also seen sort of more than 900 billion being earmarked for infrastructure spend over the next 3 years. Again, that's a great thing, but it needs to be implemented successfully.
So you talk about implementation, and I want to bring a little bit of politics into this, Linda. We have the election in a few months' time, and obviously a new government that may come post this election. There might be a new minister of finance, for instance. How does this budget are we likely to see it carried through to the end of the year, or do we expect some changes to occur if indeed there is a new minister of finance in the next few months?
Well, I think first of all, I must commend our existing Minister of Finance. I think this budget is a reflection of really trying to balance a very tricky balancing act. Yes, that remains to be seen. Of course, there are always things that change, just like our own personal budgets. Things actually do change along the way. Let's hope that those are not big negative surprises, because at this point in the cycle, South Africa really needs to spend on the right things and to, most importantly, keep our debt levels in check. At the moment, 21% of all government revenue is actually going to just paying the interest on government debt, not actually paying back the government debt itself. So if you think about that, of every 100 Rand in taxes that we pay, 21 Rand is actually going to that. So that's unsustainable. Also, South Africa is a risky proposition at this point in time to lend to. So it means that there are very high interest rates that the government has to pay on that debt, and that filters through to us as well. So high interest payments, high interest levels, that we call a high risk premium, we need to see that coming down so that we can actually get ourselves out of the situation where we're actually spending more than we earn.
Well, you've talked about where we're spending a lot of money. We're also spending money on the social relief of distress grant. Your take on the provision of funds for that?
Yes, I mean, that has been kicked down the road, so we have seen some further provision until 2025. But again, none of these things are long-term solutions which are actually going to be beneficial for our economy as a whole. And what we really need to do is have a successful long-term plan, but that is actually implemented in the right way. Because, of course, that will obviously extend to everybody in the economy. So, yes, again, it's putting a plaster over a wound. But, yes, that has been extended to 2025, and it's a good thing that that has been provided for.
Linda, as we wrap, your opinion, what are the key priorities and challenges that South Africa must address to encourage economic growth, reduce government debt and ensure fiscal sustainability in the long term?
Well, I think we know. It's all to do with improving our infrastructure, sorting out our energy supply issues. All of that is incredibly important. Obviously, having a government that is accountable, seeing them follow through on their plans and seeing them follow through successfully. So I think that is what certainly foreign investors will be looking at in terms of how they assess the risk of investing in and lending to South Africa. And that's something that we, on behalf of our investors at Foord Asset Management, also need to think very carefully about. Managing, obviously, taking advantage of opportunities, but also managing the risk.
Linda Eedes, Foord Asset Management Investment Executive, appreciate your time and packing those issues for us.